That's right. So we've got a global platform. We started in this business back in 1996. So we've been operating in private credit for almost 30 years. We are very global. We have teams in North America, in Europe, and across Asia. We tend to look at the whole spectrum, from lower mid-market all the way to large cap. Actually, 15 years ago, we raised some very large funds addressing the large cap direct lending opportunity, which we continue to like. What we do, I would say, sector-wise, we tend to focus on sectors that are resilient to macro economic shocks, stable defensive companies.
You prefer to stay away from which sectors most of the time?
We tend to stay away from the heavy cyclical sectors, for instance. But having said that, we also have a pocket of capital on the opportunistic side that allow us to price that risk and maybe take also some upsides in the form of equity for this type of more cyclical assets.
And what is your geographical exposure? You mentioned Asia. Where do you focus more? And where do you want to grow more and expand more?
So we're seeing growth everywhere, literally everywhere. North America, Europe, Asia, where we have deployed historically in the US market, number one, because that's by far the largest market in the world for this type of demand or product. In Western Europe, and we've been present for almost 30 years, so a lot of expertise, a lot of relationships in this market, and then increasingly in Asia. We've been in Asia for a long time, historically on balance sheet, and then recently having struck a number of partnerships.
And you focus more on sponsored lending?
I would say, if you look at the dollar invested across our portfolio, they tend to be in companies or borrowers that are owned by private equity firms. But and these firms tend to be large companies. When you look at our lower and mid-cap portfolio, then you have a more balanced proportion of companies that are still owned by their management teams or their founders.
Tell us more about the recently announced partnership with Mubadala and the opportunity set in Asia Pacific. Why Asia Pacific specifically? Is it trailing behind Europe and the US? Do you see the opportunities there now? And where specifically in Asia Pacific?
And we're very excited about this partnership. It's actually our second partnership. Last year we signed another partnership with a Canadian pension fund, OMERS. We've been in Asia for a long time. We started 20 years ago investing in Asia. The brand resonates, the Goldman Sachs brand resonates, and so we work also hand in hand with our colleagues from investment banking all across the region. Why now and why these partnerships now? I think it's a good match. On the investor side, they view Asia as an area where they tend to be under-allocated, right? And on our side, we're also transitioning from balance sheet only to balance sheet alongside third-party capital. So there's a good match here. We've had longevity and a strong track record in that region of the world. We have teams all over, sourcing and investing in high-quality borrowers, and we see growth. I started 25 years ago. I see a lot of similarities in Asia compared to maybe what the European market was some time ago, right? The growth of private equity buying control, applying the same recipe or the same technique that have been successful in the US and in Western Europe. And we tend, by the way, to work in Asia with sponsors.
And where are you focusing more in Asia?
I would say that that's really across, but if you look at our portfolio today, Australia, New Zealand, India would be today the bulk of our portfolio, and then for about a third each, and then the remaining third will be across the region.
Are you looking for more partnerships? Is there capacity for more partnerships, and especially in the region?
We are looking for more partnerships, and we are in discussions with a number of investors. The market is growing, no doubt.
In the region, you're
in
talking,
the region,
yeah?
And we're providing a good substitute to what otherwise the banks would do, and that's something that is trial and tested by private equity sponsors in other regions, and it's pretty natural for us to try to emulate what we have been doing there.
What is your underlying strategy and key differentiator versus competition?
We've been doing it for a long time.
Okay.
That's number one.
One of the oldest, one
Yeah, I
of
would
the
say
biggest?
certainly one of the very few that was doing it back in the mid-90s, right? And that is something that does resonate with investors. One of their concerns, by the way, back to your initial question, is has the industry been tested? And we can happily say, well, we have been tested for 28 years. So that's number one.
Track record.
The track record, the experience of our team, the alignment between us, Goldman Sachs, and our investors. And I would say also the fact that we work hand in hand with the rest of the Goldman Sachs organization, providing a very differentiated sourcing platform.